Nothing happened. All right. Here we are, Money Empire bonus session 2 with Megan Croats now, who is CPA. She's a CPA in the MBA, and she also is she's a part of our Pink Fix team, part of our membership for next year. And you've been helping us since, I want to say 2017.
Yeah, I think so. I think it's been about 3 years.
3 years now, and helped a ton of women. Awesome at the educational side of taxes because it can be very, very confusing. So I know I've had some mess ups with my own taxes, yes, even as an advisor, because I worked with a horrible accountant that my father referred me to. And Megan has been huge hands on support for me. She loves to get educated as well. So if there isn't something she knows, she researches it ASAP. She gets it done so quickly. She's a huge resource for us. So if you haven't already connected with her, reach out to Megan. She would love to spend 30 minutes with you.
Yes.
And some things that are changing, especially now with COVID, working from home, the different stimulus packages, how they've opened up that you can take money out of your retirement accounts, all of that. She's a great resource to have so that you know the consequences of anything you do today with your money when you file for taxes next year. All right, so Megan, you're going to give us kind of an overview, just the educational side of what to look for in your tax returns, how to really be empowered when you do your taxes so you know what you're getting into, all that good stuff. So I'll let you kind of take it from here.
Awesome. Thank you, Jess. Hey, everyone. I'm so happy to be here with you. I think a great thing that Jess mentioned that I want to just say in my intro is there are a lot of things that we can do together during the year to help you be in a better tax position at year end. It is very hard sometimes to make decisions at the end of the year or the following year when you are concluding your business year or your income year. There are a lot of things that you can plan for that you can do well up front that you can't really do next year. So it's great to work with an accountant year round. And one of the things that I pride myself on is I'm able to give you a lot of the time and support during the year that you need. Instead of us just talking once a year in April, it's an ongoing relationship, and I can help you plan and help you make decisions during the year that will impact your taxes. And in the long run, that'll ultimately save you money. But the main goal here is to help you better understand your taxes and your financial situations and financial scenarios. And that's something that I really, really like to do. I like to make sure that my clients are well informed and they understand their returns and they understand the decisions we make together. Because I've had so many clients who come to me with a return that they have no idea where those numbers came from or what they need in the event of an audit. And that's something that your accountant should really be your partner at. And that's something that I really like to do. I like to be on the same page as my clients and work closely with them to get the best possible return, but also just take the best position so that you're not taking a risk on your return that years later you're unprepared for. And because the time period for which the IRS or a state can audit you is a few years, you would hate, for someone to come back to you, the year you retire and say, 3 years ago, you underpaid your taxes by $5,000. That's a decision that could influence your finances drastically. So we try our very best to get you on the right schedule and the right payment plan and everything while you're actively earning your money and working and building your business so that you don't have these issues pop up later. So
there's so many times I'm like, yeah, we're going to bring Megan into this conversation so we know we're not going to hit you up with too much taxes come the next time you file or for whatever reason it is.
Exactly. It's so much easier to plan up front. Just for example, if you are thinking of cashing out stock, I've had clients who didn't know that they were going to owe taxes on that cash out. And had they known that, they might have taken out a larger amount and planned, for this percentage to go away not go away, but to be paid over in taxes. So it's something that it influences your decisions as you make them. So it's important to work closely with an accountant who can help you determine the right way to plan. And that's something that I always want to help with. And I stay actively involved in the financial situations for all of my clients. So one thing that Jess mentioned about COVID is working from home. And this is something that I know is applicable to a lot of people. If you are a person who normally works in one state, but this year you've been working from home as a result of COVID, that will change your tax profile because instead of paying all of your taxes over to New York next year, you should be paying them to New Jersey because you were located in New Jersey, which is where you worked. in order for that to be facilitated well, one of the things that I've had to advise a few clients on is changing your withholdings through your employer to be from New York to New Jersey, for example. If you don't do that, what happens is at the end of the year, when we, apportion your income between New York and New Jersey, you're going to owe New Jersey money and you're going to get a refund from New York, which, in a perfect world would happen around the same time. You'd get the money from New York to pay New Jersey, but it doesn't always work like that, unfortunately. I've had a lot of clients who have had to pay up to New Jersey before they got their New York money back, and that's something that's obviously a difficult financial decision and something you should plan for. But if you work for an employer who you receive a W-2 from, it's pretty easy for you to facilitate them to, instead of withholding from New York, changing that to New Jersey. So it's a process that I'd be happy to help you with. It's usually just a process of updating a couple forms from your HR department or your payroll department. And I've helped a couple clients with those already, but it's definitely something you want to be mindful of, because that'll change your taxes next year that, you want to plan for as much as humanly possible.
Does that mean if you work in New York City, you don't have to pay the city tax?
So if you only pay the city tax if you live and work in New York City. If you
Okay.
just work in New York, you just pay New York state taxes.
Okay.
But they are higher than New Jersey's. So it could benefit you this year to be in New Jersey. If you were actually working in New Jersey most of the year, it can benefit you to put your money to New Jersey state income as opposed to New York. And I think there's going to be a lot of people who go through that this year for the first time, because most of us are used to going into an office every day.
Yeah. So what if it's like half and half? So let's say in the fall they start back going into New York.
So you can, your payroll department most likely has flexibility in terms of how you withhold. You can always change it back. You can say, okay, once we're back in the office, I'll switch back to New York, but temporarily I'll switch to New Jersey. But what we can also do is at the end of the year, I work with my clients to say, okay, now that the year is coming to a close, what percentage were you in New Jersey? What percentage were you in New York? And at that point, at least we can plan for, okay, you're probably going to owe another, $1,000 to New Jersey. You'll get it back from New York, but the timing might not work out. So I would plan at least, it would give you a few months to get that money together to make that payment over.
Okay. Very cool.
Yeah, it's just the money that your employer withholds from you, keep in mind, that is always just an estimate. Your employer doesn't know your tax situation, so they withhold from your paychecks based on estimated tables and estimated salaries, and those things are obviously subject to fluctuation. So one thing to just keep in mind there is that, moving your withholdings from one state to another is just a precautionary measure. It'll start adjusting your withholdings, but it's not going to be an exact science. There's still going to be some sort of allocating and things like that we'll have to do, but it'll at least get you in a better position so that, you didn't pay New York all this money for no reason that you'll have to wait to get back.
Okay. Very cool. Thank you for that tip.
You're very welcome. Another thing that we can talk about is some of the stimulus plans. Now, I know the first round of the stimulus plan was passed and those payments were made, and those were based on your 18 or 19 income. And then to the extent that your 2020 income is lower and you possibly deserve or, were entitled to a larger stimulus plan, that's something that you'll receive next year when you file your 2020 taxes.
Mm-hmm.
However, the opposite is not true. If you received the stimulus money, but you were not entitled to it based on your 2020 income, from what I understand, the IRS is not going to be collecting that money back from you. What is unclear right now is how that will actually flow through a tax return, because they haven't released yet what the 2020 tax returns are going to look like. So without knowing that, it's hard to say definitively that won't happen. But just one thing worth noting is the IRS and the president has said in that stimulus package that money that you've received, it is not going to be taxed later. They're not going to be asking for it back. So that money was yours to keep. They are working on another stimulus plan, which could potentially include another stimulus payment. It's hard to say definitively how that will shake out. But it's definitely when you're receiving these stimulus plans and receiving the benefits of the stimulus plan, you should definitely work with your accountant to make sure that you're properly planning how that impacts you. One of the things that I mentioned to Jess is in the latest executive order that the president proposed, there is a potential for the capital gains tax to be reduced. And the capital gains tax, if it is reduced, is going to trigger a lot of people to choose to cash out investments or take certain gains that they maybe were spreading out over time. It's a financial decision that there is a lot of things that go into that, but taxes is one of them. And as I mentioned to Jess, it'll probably be a busy last quarter for us because people will be coming and saying, okay, should I cash out this amount? And if I cash out this amount, how much do I save in taxes? There's all kinds of decisions that have to be made about that. And it's not just an important financial decision, but the taxes are obviously a large part of that. So Jess and I work together with our clients to make sure that we are on the same page about when we're cashing out and how we're doing it.
Yes, exactly. Being very strategic with it.
Yes, there's definitely a strategy to it. And like I mentioned, it is a strategy that you can't decide on next April. When we're filing your tax, you say, oh, I don't have enough money to pay that. Can we cash out more of a stock? You're now in a new year. So that's a decision that, as you're cashing out on your stocks and making decisions like that, it's important to involve us up front, and we can help you determine what's the best way to treat that.
Yeah, taxes is an ongoing strategy play, I guess you can say.
Yes, definitely. And I think a lot of people make the mistake of thinking, I'll just figure it out in April. There are some things you can't wait until that late to figure out. And
it's kind of that spiral. I sell again to pay the taxes, but then I need to sell again the next year to pay for the taxes. Just
exactly. And it's a much better thing to get an upfront hold on.
Mm-hmm. Awesome.
So I know one other thing that Jess had talked about is, the potential for starting a business. And that's a whole new tax beast when you start a business. When you start a business, you're entitled to different types of deductions and claiming different types of income. There are a lot of strategies that come into business tax planning that I think a lot of people, again, don't know up front and don't necessarily plan well for. Mm-hmm. So I would say that if you're starting a business, I suggest you make an appointment to consult with a tax person ASAP, and I'm happy to be that person. I would love to meet you and talk through your situation. But at any rate, one of the most important things I tell everyone is always track your expenses very closely. If you're starting a business, that is something that you cannot, I cannot stress enough. You want to have a lot of people keep Excel schedules and they keep copies of receipts. You just need to keep track of those things because those are valuable deductions for you, and we don't want you to have to pay tax if you've spent that money on building your business. And so I would say the first and foremost thing is keep track of all of your money, your incomes, your outflows, everything as much as you possibly can. So that way when tax time comes around, you're in a good position to take advantage of those benefits.
Yes. They are getting into the habit of tracking money. So at least
awesome.
Just carry it over to the business. Keep it going.
Yeah, it's an important thing on a personal level, absolutely. But on a business level, I find that there are some benefits that are available to you on the business side that are not on the individual side. Then you might not realize, you might forget. Like just for example, as an individual, if you take someone out to lunch, that's not something you can ever get a tax benefit for. But if you're operating a business and you're taking them out to build your business, there's a potential for you to take that deduction. And you might in the past not have kept that receipt or not have noted that as a business expense. That is a real business expense and something you should track. So it's important to understand what business expenses you can and can't take and how you need to keep track of those, definitely.
Awesome. All right, so we talked on the payroll. If you're working from home and you're in a different state than where your job is located, talk to payroll, switch states so you're withholding in the right state. The stimulus plans, how that's going to work. Capital gains tax reduction. That's a wild card that we're still working through to see what's going to happen with that. When you start a business, how to set it up right. So there are different ways to set up the business, right? We have an LLC,
yes,
sole proprietorship, an S corp, a C corp, a nonprofit.
Yes, there are so many different ways to do it, and you want to be in the right setup that benefits you from both a tax point of view, but also a legal point of view. When you're creating this entity as a business, you have to work with a lawyer often to get the paperwork filed to establish yourself as an LLC or a proprietorship or a C corp, all of that stuff. That's an important decision that you should talk about with a legal advisor. But also there is a tax component to that, understanding how your taxes will flow based on those different setups.
Yes. Tracking your expenses and I mean, I use QuickBooks, a place to just keep the receipts so that you don't
Yeah.
have to physically keep all the receipts.
Yes, definitely.
And figuring out what's the system going to be. Like I know Wilza, we've been working on what's going to be her tracking system for just her money. Same thing for your business. Have a system set up so that you spend money, it goes into an email box, or it goes to your system to upload into QuickBooks. Find a
Yeah.
pretty seamless system so that everything's accounted for, or you just, like I send my QuickBooks woman my statements each month. So then she knows exactly where the money is coming, my credit card, my bank.
Right.
There's no double counting. Everything's accounted for. Easy peasy.
Yeah.
For me.
QuickBooks can be an awesome tool. I definitely recommend it. It can be a great
What was
tool for
that?
you. I know I have clients who can send me their output from QuickBooks at the end of the year, which makes it very easy for me to do their taxes and prepare everything for them. So it can be a great tool. I mean, if you're starting out, it might be a little bit on the expensive side, but in that case, there are still ways for you to track things, whether it be there's some apps that are free, as well as you can use things like Excel to keep track of those things also.
Yeah, exactly. All right, cool. Anything else? Wilson, do you have any questions for Megan while we have her here? Anything that this brought up?
No, but it was good to know about the payroll and like, cause I live in Jersey and work in New York City. And I was thinking about working from home, and I work at a school, but we are going back into the building, so I don't, so I don't think that would apply for me. But I
But
had
was there a time of the year where you did work from home, or you went into the building all along?
I went into the building on and off.
Okay.
Yeah. Until like I had summer vacation. But
Okay.
that vacation. But I always wondered, like some people will say they'll like get money back, even though they live in Jersey, but that has not been my experience in doing taxes. Where like when tax season comes, it's kind of like it cancels each other out and I don't really get anything back.
That is the case for a lot of people. It is hard to take people's advice on it because everyone's tax situation is different. You know, it matters where you own property or what income level you fall under. There are so many different factors, so it's hard to generalize there, but it does. My experience is that a lot of people, you know, they what happens is they receive money back from New York and they owe that to New Jersey. People who live in Jersey work in the city. That's a very normal occurrence for people in that situation, I think.
Okay.
But all that said, I'm happy to set up time with you, Wilza, if you'd like. Later in the year, we can talk about that and see how this year might be different.
Okay. Sounds good.
I have a question because Wilza, she just did a certification. That was a few grand, right, Wilza?
Yeah.
But she's a W-2 employee. She can't deduct that then, can she?
Not usually. It's pretty.
Yeah.
You'd have to have some sort of 1099 income.
Yeah.
Yeah.
To be able to deduct.
But I'm happy to talk through it in more detail, and we can strategize and see if there's anything else, maybe.
Yeah. Yeah. No, just because that was a big upfront cut, that'd be nice because it is gonna. Right, Wilza, that is for future business.
Yeah, like yes. What I usually do is there's like this teachers like thing on the taxes. Since I do work at a school, a lot of times I will have to spend like my own money last minute, and then like the school doesn't reimburse me. Like I have to dress up for whatever Dr. Seuss day. All the, you know, like I'll buy snacks. I'm like, you know, do counseling, so like I'll buy things for like our counseling office. And so what I'll do, I'll put that into taxes, but the maximum is I think $250.
Yeah, educator expenses are capped at $250, but when you start a business, those things become deductible as much more than when you're an individual. So that's something to keep in mind if you start to go down the path of wanting to build a small business. That those things can become something you get a benefit for.
Got it. Okay.
Yeah. That's something we can explore, Wilza, next time we talk one-on-one.
Sounds good.
And stuff. All right. I'm going to stop recording.